In the morning, the news was coronavirus cases climb and the stock market goes up. We have a record number of unemployed and the stock market goes up. If Trump wins the presidency, the stock market will go up. If Biden wins the presidency, the stock market's going to go up. And then the WHO came out and said the global pandemic could get worse, worse, and worse. And so the big techs kept going higher, higher, and higher. Also during the day, the Fed disclosed that the central bank will purchase about $80 billion worth of treasuries monthly. The latest schedule shows an average daily purchase of about $4.5 billion or $40.2 billion spread over 9 days. For mortgage backed securities, the average daily purchase will be nearly identical at $4.6 billion a day or $46 billion spread over 10 days. And for a brief few minutes, the S&P 500 got back into green for the year. But that all changed soon enough when the Dallas Fed's Kaplan warned that the Fed's market support won't last forever. And with that, the markets reverse course. And those course reversals can be dangerous. So that's why I want to go back and take a look at the VIX or the fear gauge because it's just waiting for the opportunity to explode higher and take away your profits. So let's take a look. And so now we're taking a look at the 6-month daily on the VIX, and this is stockcharts.com, and the symbol is $VIX that you can see here in the upper left. Now, looking at the chart itself, you see this here. This is the 200 MA moving along there in a nice, generally uptrend pattern. And you can see we bounced off of that point here in early June, and we had a minor eruption at this point here, say about the 14th, 15th, 16th of June, somewhere around there. When the VIX rises, that's where the stock markets fall. So this is the reverse or a mirror of the stock markets. When the VIX heads higher, the market heads lower. And when the VIX heads lower, the markets head higher. So what we're looking at is a bottoming basing here above 25. Normally, we like to see it, say, below 15. But when it's trying to bottom in this upper area here, that means danger lurks not too far away. And you can see it's very stubborn, does not want to go under that 25. And it's setting up for another small eruption potentially, because you look down here at the lower portion of the screen, you can see that the MAC came up above, it went right back down below the slow line, but it's right near that zero line, and it surely wants to head higher. The bottom here is slightly lower than here. Same thing in the MAC. This basing period here is lower than here, and it means that the trend wants to go higher. You can see that also here in the upper portion of the chart with the RSI. The RSI is also bottoming basing in this area here, which is slightly higher than it was during this period because it wants to go higher, and it may. So be careful. Let's now go take a look at the weekly chart. And so now we're taking a look at the 2-year weekly on the VIX. And this is starting to show a pattern that I think is one of the most reliable and that I prefer, whether you're looking at a stock indice or an individual stock or the VIX. You see here in the lower portion, the MAC, the fast line headed on down, crossed through the slow line. It made an attempt here and got reflected back down to this point here. But as you can see by the histogram, this level here is slightly lower than this level here. So definitely it's in an uptrend where the fast line is moving closer to the slow line. Now, if it can bottom and base here and then turn higher and cross back through that slow line, that means trouble. And I think The probabilities are that that will happen. I don't know exactly when, but we want to continue to monitor that very, very closely. Again, you can see here, this is the 50 MA, this bluish line here, and it definitely, you can see, does not want to go below that, say, 25 level here. Very, very stubborn, and that means potential problems. It's not guaranteed. I just think that the probabilities are higher that we may have a little bit of bubbling up in the VIX, which could cause some volatility days with the stock market. So up here into the upper portion, again, the RSI, you can see that the bottoming basing process here is near that midline, which is slightly higher than it was back here in these areas as well. So be very cautious, be very patient. But watch this VIX, because if the VIX decides to erupt, then that means the stock markets are likely to tank. Now, is it going to be a crash? I really doubt it. I just think that we're certainly primed for a correction, and I have some dry powder ready to go. So you too look for those opportunities. And for today, that's ChewDog Charts. Thank you.